Welcome back. The S&P 500 closed at an all-time high on Tuesday at 7,519. The Nasdaq hit 26,656. The VIX settled at 16.2. And then the real action began. Tonight was the most consequential single earnings session of this entire earnings season. 5 major companies reporting after the close: Marvell Technology, Salesforce, Snowflake, Synopsys, and HP. Across sectors from semiconductors to enterprise software to hardware. The verdict is in, and it tells us exactly where this market is heading. Marvell Technology is up more than 7% in after-hours trading. Snowflake surged over 32%. Salesforce edged lower. Synopsys beat estimates. HP crushed expectations. Let me break down each one and explain what it means for your portfolio. I am Daniel Reed. This is Market Lens. Let us get into the data. Marvell Technology reported its fiscal first quarter results tonight, and they were exceptional. Revenue came in at $2.418 billion, up 28% year over year, beating the midpoint of guidance by $18 million. Non-GAAP EPS was $0.80, 1 penny above the midpoint. Data center revenue hit $1.8 billion, representing 76% of total revenue, up 27% year over year. But the headline is the guidance. Marvell guided second quarter revenue to $2.7 billion at the midpoint, representing 35% year-over-year growth. That blew past the $2.6 billion consensus. They guided Q2 EPS of $0.93, above the $0.90 estimate. And then, the CEO Matt Murphy did something rare. He raised full-year guidance by a significant margin. Fiscal year 2027 revenue outlook raised to nearly $11.5 billion, approximately 40% annual growth. Fiscal year 2028 revenue outlook raised to $16.5 billion, approximately 45% growth. Data center revenue expected to grow roughly 50% this year and accelerate to roughly 55% next year. The interconnect business, optical networking that connects AI data centers, is now expected to grow more than 70% in fiscal 2027, well above the 50% projection from last quarter. CEO Matt Murphy said, "We are seeing exceptional AI-related bookings, and we are significantly raising Marvell's revenue outlook for both fiscal 2027 and fiscal 2028. The stock closed at $208.26 and surged to $213.50 in after-hours trading. This is the template for how an AI infrastructure company should report in this environment. Beat and raise, with conviction. Now let us contrast that with Salesforce. Salesforce reported revenue of $11.13 billion, up 13.3% year over year, beating the $11.05 billion estimate. Non-GAAP EPS came in at $3.88, crushing the $3.13 consensus by 24%. Adjusted operating margin hit 34.8%. They raised full-year revenue guidance to $46.05 billion. They raised full-year adjusted EPS guidance to $14.09. And the stock fell more than 1% after hours. Why? Because the market is now asking a different question. The question is no longer, did Salesforce beat? The question is Agentforce, Salesforce's AI agent platform, growing fast enough to offset the cannibalization of traditional seat-based licenses? Agentforce ARR was $800 million last quarter. That number needs to be meaningfully higher. The market wants to see evidence that AI products are driving net new spending, not just shifting existing budgets. This is the Zscaler playbook repeating itself. A company beats on both lines, raises guidance, and the stock goes down because the market is demanding proof that AI is additive, not cannibalistic. Salesforce is down 32% year-to-date, down 37% over the past year. The stock trades at 23 times earnings, which would normally be cheap for a company growing 13% with 35% operating margins. But the market is pricing in structural disruption risk to the subscription software model itself. That is the regime change I warned about in our last briefing, and it is playing out exactly as predicted. Now for the surprise of the night, Snowflake. Snowflake reported total revenue of $1.39 billion, up 33% year over year, beating the $1.32 billion estimate. Product revenue was $1.33 billion, up 34%. Non-GAAP EPS was $0.39, beating the $0.32 consensus by 22%. More importantly, remaining performance obligations hit $9.21 billion, up 38% year over year. Net revenue retention rate ticked up to 126%. They added 616 net new customers in the quarter. 779 customers now generate over $1 million in trailing 12-month product revenue. CEO Sridhar Ramaswamy said, AI continues to be a powerful tailwind for Snowflake, and Q1 marks a clear inflection point in that journey. Snowflake raised its full-year product revenue guidance to $5.84 billion, representing 31% growth. They raised non-GAAP operating margin guidance to 13.5%. And they announced a $6 billion multi-year infrastructure commitment to Amazon Web Services. They also acquired Natoma, an enterprise model context protocol platform for AI agents. The stock surged over 32% in after-hours trading. This is the exact opposite of what happened to Zscaler. Snowflake proved that AI workloads are actually running on its platform, consuming compute, generating revenue, and accelerating growth. The consumption-based model means more AI equals more revenue. That is a bullish story the market can get behind. Two other notable reports tonight. Synopsys reported earnings of $3.35 per share, beating the $3.17 consensus. Revenue was $2.28 billion, ahead of the $2.25 billion estimate. This was the first full quarter including the Ansys acquisition. The stock was relatively flat in after-hours trading, a solid beat but already priced in after a 5% pre-earnings run. HP reported a massive beat. Revenue came in at $14.4 billion, up 9% year-over-year versus $13.99 billion expected. Non-GAAP EPS was $0.86, beating the $0.72 consensus by 19%. Free cash flow was $800 million. Management raised full-year outlook. The stock was up about 5% during the regular session and held those gains. HP is a classic turnaround story, executing well under difficult circumstances. Interim CEO Bruce Broussard is steadying the ship, and the AI PC refresh cycle is providing a tailwind. Let me pull this together into a coherent market thesis. Tonight's earnings tell us three things. First, the AI infrastructure build-out is accelerating, not slowing. Marvell raised guidance by multiple billions of dollars for 2 fiscal years out. The data center interconnect business is growing 70%. This is consistent with what NVIDIA told us 2 weeks ago when they guided $91 billion for next quarter. The CapEx cycle in AI has not peaked. It is re-accelerating. Second, the AI software story is bifurcated. Snowflake showed that when AI workloads generate consumption, the market rewards you massively, up 32%. But Salesforce showed that when you sell seat-based software that could be disrupted by AI agents replacing human workers, the market punishes you even when you beat. The Zscaler template is real. Enterprise software companies need to prove AI is additive, not cannibalistic. Third, the divergence between infrastructure and software is now the single most important trade in the market. Marvell, at 64 times earnings, is rallying because the guidance acceleration justifies the multiple. Salesforce at 23 times earnings is falling because the market sees structural risk. This is the capital rotation from the application layer to the infrastructure layer continuing in real time. What does this mean for tomorrow? Futures are pointing higher. The Marvell and Snowflake reactions should provide a tailwind for the broader tech complex, particularly for semiconductors and AI infrastructure names. But look for continued pressure on enterprise software stocks, especially those with seat-based licensing models. Thursday after close, Dell reports. The stock is up 97% year-to-date. Dell is the most direct read on AI server build-out outside of pure semiconductors. If Dell guides strongly, it confirms the infrastructure thesis has further to run. And Friday, core PCE inflation expected at 3.3%, the fastest since late 2023. Fed Governor Waller has already said the next rate move is just as likely to be a hike as a cut. The setup for the rest of the week is clear. Infrastructure momentum versus software skepticism, with a macro wildcard on Friday. Marvell proved the AI build-out is real. Snowflake proved AI workloads are monetizing. Salesforce proved the market is still punishing software companies that cannot quantify their AI upside. 3 reports, 3 different signals. One market that is rotating capital with surgical precision. Keep your data sharp and your logic sharper. I am Daniel Reed. This has been Market Lens.